What's up, everybody? It's your boy Doc. It is 3:17 p.m. here in New York City. We're going to be talking, not so briefly, but briefly about the SPY, the action of the SPY. Tomorrow's CPI data report, and this is the first one in a while where people are actually really on the fence. You know, for the past few Feds and CPIs, we kind of knew what was going to be expected. With this one coming up, we're not really sure. NVDA had its earnings on the 28th, and from that earnings, we had a bit of a downturn in NVIDIA, and it kind of took the market with it. And it's kind of, I don't like saying it, you know, that one stock could drag the SPY with it, but in this case, it's kind of hard. It's kind of hard not to think that, because NVIDIA was the driving factor. It had it was the major chip technology. It was the major tech company. It was the major options traded ticker. It was the real power behind SPY for a while. And for that to take a downturn, the SPY took a downturn. But if you look at them side by side, you know what? Let's put them side by side on the fence. On the fence? The what? On the chart here. We have some similar actions. Right? But they're not so similar. NVIDIA is kind of making a bit of a support right here around the 100 mark. If we lose that 100, we have the 200 MA below it. I was looking at 87 on NVIDIA around earnings. We have the workshops that we've been following the past, I don't know, I would say about 6 different workshops that we followed NVIDIA up to earnings. And the overall downside on it was 200 and 87. Below 87, then we're going to have a serious problem. But if we hold 100, I think that's still good bullish territory. If we hold 87, okay, that's a little bearish, and we're going to have to start thinking it. But wait until I'm going to turn the high beams on now, and I'll just watch your eyes. I know it's a little crazy. When we're zoomed out on the daily, there's a lot of lines, but it helps when we're doing sessions and we start talking about swing trading and intraday trading. These lines really come into play. So if you can see here, we're a bit of an overall trend downward. So 87, which is right in the middle here, the 200 MA, this kind of, it goes in line with the trend downward. This would be a down channel, and what happens with down channels? They explode upward, right? They tend to go upward. And if we really zoom out, we can see that it's more of a, let's get rid of the beams there. It's more of a big pole and a bit of a bull flag, right? So when you see these, the YouTube videos and there's articles, and they're all, you have to keep in remember, these they get paid by clicks. So when they say market crash or NVIDIA to zero, like all these like insane descriptive headlines, it's mainly just for you to click on it. So if we just take a step back and realize, do we really think the market's going to crash? No, but it's kind of, I admit, sometimes it's fun. To say, oh my God, we're in a crash. We're crashing today. We're not really crashing today. We're just going down 5 points, and it gets a little exciting. That leads me to my next point. People they don't always say, but people tend to ask me, oh, you're a bearish person, right, Doc? I'm like, well, not really. I just like to spot the down moves easier. So there's a famous phrase in the world of, trading is staircase up, elevator down. And that's really what happens. You can see it here on the SPY. All movement upward is, with the staircase pace, slow and steady building. And then when you have a downturn, it feels like it just takes an elevator and just drops. What we're doing here is we're waiting to see for that drop, right? We have the consolidation here. The earnings came out on NVIDIA right around here. Not to say that this was the only factor that take it down. It's a market. There's 500 stocks in this ETF, but it was a leading factor. Down, consolidation, but is this really a rebound, or is this just testing previous support? Remember, the main takeaway that I always say in all of QTA really is the break and retest, right? You'll hear Bryant say it in his videos all the time, a break and a retest. So if you have a break of a support, we do a retest just as if we were breaking resistance, coming back and retest for higher. A break of support, you can come back and you see that retest for a possibility of lower. So CPI tomorrow is going to, with all intents and purposes, push us in a direction. It's not going to change the way the market wants to go. It's going to just give us a shove in the direction based on those numbers. So let's say, the market reaction tomorrow is a good one. We're going to try and find the bookends, so to speak, of where the possible moves upward will be and the possible moves downward could be. Now, there's about 38 minutes left in the market today. I'm not going to take a lotto position for tomorrow just because I'm going to try and focus on this. But if you do take a lotto, just remember that it is a lotto, right? No matter how much or how steadfast you are in your belief that we're going to come in with this exact number, even if you get the number exactly right, the market reaction is 100% coin flip. You do not know how the market's going to react. And I use this example a lot with NVIDIA, being that NVIDIA was notorious. I was trading NVIDIA for the last, 2019, almost 5 years. Wow. So with that, at every earnings, I was this guy. I would tune into earnings, and I'd have my fresh powder ready to go, buying shares when we got this good report, and add on to my position. And every time they come out, they're like, this is the best quarter NVIDIA's ever seen, and it tanks. So even though you have these great numbers, the great reports, they beat earnings top and bottom, but it tanks. Why does that happen? It's because banks and investors and whales, or whatever you want to describe them, institutions, they will trade. They will trade the way they want to, using the guise of a catalyst event. Right? You're able to dump thousands of shares on an event, and it gets blamed on the event rather than... Anyway, we're not going to get into that semantics, but just know that the market reaction could be vastly different than whether the positive or negative numbers come out. So that being said, we're going to start with the technical analysis, right? We can clearly see here that there's this, the 40 MA, we're on the 4 hour. I like to use the 4 hour in the day on the macro view, and then when you get into it, like the 15 and 30 for more of a swing, and then obviously down 5 and 1 minute for like quick intraday scalps or anything like that. So looking on the 4 hour in the day, we can have a pop up here. It's easy to see 552. 552 would be the top, and then to the bottom side, the local, we'll say, is 543, and then really the bottom, maybe, to watch out for the rest of the week, even next week, is 538. Remember, tomorrow is CPI, but next week is the Fed meeting. This might be the most, I probably say this, or at least everyone I've heard say that this is the most important Fed meeting we've had in the last, decade or year. This is really actually an important Fed meeting. Again, because they don't know whether we're going, up or down. There's usually a consensus estimate, and you can hear people say, "Oh, the consensus is this and that." People are really unsure of this one, and because we've had such a good, strong, recent upturn, and we're starting to come down, people are getting a little panicky. People are getting a little fearful for the money, and when people get fearful, you know what happens. So, even though we have these bookends of 538 and 552, we kind of want to see where the sentiment is, where everyone else is lying. So with that, we can easily, if I can find, there it is. We can come to the Discord here, and we can find the SPY weekly. We'll go on the most recent one. This is the Friday's expiration for SPY that we're looking at. And just wait for it to load. I have a bunch of programs open because I'm multi-streaming here. So just to break down of what we're looking at, the absolute GEX is the highest liquidity strike right here. The max pain is an attractant. I use it as a support and resistance as well. This put volume spike, I'm noticing this could be a bit of support, and that's at the 544 area. 540, a lot of people are looking at, and it also has a giant put spike in here. This gives that strike validity because it has two pieces of data on it, right? We're going to examine it a little more in the advanced GEX, but this is awesome for a snapshot. And that's what this is. This is the GEX gamma exposure. Everyone that's new to QTA, welcome, by the way. Welcome. This is where you're going to look for just a quick and easy. It's the most information or the best information that you need to make a decision at your fingertips, and it's every 15 minutes, every 60 minutes. And the awesome part about it is it's a tape, so you can scroll back in time, right? You can scroll back in time and see when did we change, when did it shift, the absolute GEX, whatever you need to do. Use this. If you're trading intraday, use the SPY 0 DTE, but now that we're at a half an hour before close, we're not going to really pay much attention to this, but let's just take a look at it because it should be more action coming about SPY. So this, you can see, make this easy to say that a lot of people are now looking up. I don't think that was the case earlier in the day. Well, not a lot of people looking up. There was more GEX higher. I should say that disclaimer. I kind of look at it as like pure sentiment. In reality, it's a lot more of that. It's more math calculations and based on options data. So I look at it as there's a lot of attraction up around 549 and even 550. Tomorrow morning, CPI comes out. That could throw that all in the water. This is just for today's expiration. So people are playing this in the anticipation for the reaction into tomorrow, not for actually tomorrow, right? So that was probably I didn't want to throw too much information at once, and that was probably a wrong move to boggle your mind in there. So let's just stay with the weekly, and we can go to the advanced GEX and look up tomorrow's 0 DT for it. So what we do in advanced GEX is the same thing we just looked at, but we're able to pick what expiration we want. So if we're trading out a month or 2 months, we can easily pick those expirations and devise our own, generate our own report for it. So today's the 10th. We're going to go to the 11th, the 12th, and 13th. This is going to be the rest of the week. This is going to be the same information that we just saw on the SPY Weekly under the feed, but it's going to be a little more detailed, and you're going to see how I can toggle the data to get more of a solid bookends. That's what we're looking for, right? On the technical analysis, we marked off the first one here at 543 and the other one at 552. We're looking for consensus on that. Or if we're going to see if they, you know what, not 543, but we're going to maybe cover this gap and everyone else is looking for that down to 540. Things like that. That will come to the surface. That will show, or that will present when we dive into the GEX a little more. So we have 3 dates this week: Wednesday, Thursday, Friday. We're going to scroll down and we're going to get this table. Looks familiar, right? We're going to first put on the absolute GEX. Instead of just this one value on the advanced GEX, it gives you the multiple where the other spikes are. And remember, absolute GEX is an area of high liquidity. So once these start gaining in volume, this becomes more of an attractant than this one. So if the spot price continues down after CPI, we'll see this spike up, and we'll know that 540 is going to be an area of high attraction. We can add to that. We're going to start with the puts. We're going to do put open interest. The first open interest area is 540, and then all the way down here at 525. That might be hedges for another play upwards. We're not even going to try and speculate why that's there. We're just going to notice that it's there. 540. This seems to be a big one. 545 was our other one, right? Was that 545? Or 543. Sorry. Numbers all day and dealing with insurance and Medicare and then back into stocks. Sorry about that. So 543. Doesn't really hold any weight here. 545 and then 540. So let's mark off 540 in our brains. And then we're going to check on the upside. Let's see if we can do it. Have them both on the same time. Perfect. 560. That's a big one. And also, right here is the high GEX at 553. That kind of makes sense of what we were talking about here, right? 554. So they get 553 just under it. This one we were looking at 552. I'm just holding that up because it's the first high resistance that we should see on the tech chart. I guess people are just, like, we're going to look at this one because this makes more sense. It's a double touch right there, 554. So you get 554, you go down one sooner before that, and 553 becomes your high GEX. We can hover over it, you can see it. 553, 31.4 million. Oh, and the absolute GEX, we can put it back on and see 553 too. Not the highest, but still up there with secondary. This is the primary, the secondary. Right now, the primary is right around the spot price. We probably had a straight day, right? Yeah, we opened and closed right around the same 548, within the same dollar. Everyone's waiting for CPI, right? Everyone's on the, even yesterday you could see that. Not too much action, just kind of steady waiting for CPI. The more you'll see a sideways day, or more sideways days before an event, you could expect more of a reaction after. So if you look at NVIDIA was trading sideways for, let's see, we don't even have to guess. We can see. So here's the earnings. So 1, 2, 3, 4, 5, 6 days almost, without the exception of this one. 6 days though, we all stayed in that same area. That it's just more like potential energy building up to kinetic, right? The more you hold, the more reaction you'll see. So there's all these people waiting for to do something. Okay, now we got the report, and now we're going to do something with it. So there's less of it. And the more indecision there is, the higher reaction on a decision you'll see. So, I mean, it's not a tried and true theory. It's just something I've noticed. So the whole week, the 2 days in the week, we're waiting for CPI. I mean, this is a possibility. 560s, right? 560s, and say 540. Let's keep that in mind. 540 to 560. That would be our major bookends. I want to turn these on, but there's going to be a lot. So we'll actually we'll clean these up. That way we'll walk away with something. So we're not going to actually have a way to determine actual direction, but what we do with CPI is find the bookends, and then we can play accordingly. You could do a straddle, you could do chokes, strangles, whatever you think to do, or you could pick one direction and then hedge the other one. That's my favorite way to do it. So if you want to play the upside, you say you'll get 3 calls and in the 560 range or 550, and then maybe 1 put in the other direction. So in other words, if it goes in your direction, great, you win all the monies and it covers the hedge of the low side. In the other event, if it goes down, you lose the premiums that you put up for this direction, but the put win will just pay for the premium. So it's either a win or a break even. That's the way I like to play catalyst events, especially on earnings. I don't do much earnings anymore, but on earnings, that's the way I like to do it. I like to spread it out to a calendar one, right? Which leads me into the next idea, that there's, especially around the Fed meeting, CPI not so much, but the Fed meeting, there's always 2 moves. There's the first move and then the correct one, or at least that's the phrase. So in other words, you'll have a pop up and then a pop down continuation. CPI, maybe not so much. You'll just see a pop up and then a decision around that, whether the market's gonna accept that pop up and trade accordingly, or let you get all the buys out and then trade accordingly where it wants to go. So if the market was intending to complete this trail back down to this 530 mark, the CPI could push us in that direction of faster, or a good reaction from CPI can push us up, but the market will continue down. Like, in other words, CPI won't change the market direction on a broader scale, but maybe just on a minimal scale. So keep that in mind too. It's not something that's going to change the course of the direction of the market indefinitely. It just might do it temporarily. I guess that's the best way to explain it. So that's really what I think the best way to trade CPI is just to wait for the numbers to come out and trade accordingly. Let the big mathematicians and the guys that have a lot of weight involved in the market itself, let them try to hedge and try to, I think, really, thinking back, when I was at Morgan Stanley, I was in publishing. I wasn't trading on the floor, but I was involved a lot with the analyst. And a lot of the way they look at trading is completely different than when I speak to people one-on-one. People one-on-one, I want to be able to, get a side income and get a beach house. Okay, great. That's a plan. When the way that the banks trade is, they're almost trading to protect. They're trading to hedge. So major catalyst events, they trade to hedge this and to get through with the least amount of damage as possible and let time be their money maker, right? They have the amount of money in there to just invest smartly using the methods we're talking about today, the quantitative, the cold hard math, as I call it, right? Slide right into the cold hard math, the quant chart. This is where we're going to actually solidify our bookends for the week. You can go back to like at least 2020 here on all this data. And if you just joined QTA, take advantage of that. Back test to your heart's content. Remember some Tesla earnings play that you traded and see if, having this data now would help you. But let's start from the outer ways in. The 2 sigma lines, this is 2 deviations from the mean, which is right here in the middle, at the midpoint at 540. Calculations, right? On the top, 554. Sounds familiar, right? The bottom side, 525. This is new numbers to me, right? This is new. We did not discuss the 525. Where is the 525? Somewhere right here. I don't think I would have marked this off. I would not have marked this off on a technical aspect. This, to me, did not exist. Calculations tell us that it exists there quantitatively. If we drill in a little sooner, we have the buy zone, 533 it starts, and then this is a little bit of a wide zone this week, 537. This is our our quantitative support. Our quantitative resistance is the sell zone, which we are just tapping into right now, and that starts just below where we are at 547, and it goes all the way up to 552. 552 sound familiar? Yes, it does. Right here. This is the first one we looked at, right? That first spike. That is the top of the sell zone. If CPI comes in and the reaction is a bullish reaction, we could plow right through this and start testing 2 sigma at 555s, at the 555 zone. If it's a bad reaction, there's a lot of support from there, right? The 2-day VWAP is going to be similar tomorrow than it is today because it's been trading sideways for so long. That's going to be your first support. Your max pains at 545 is another support. Midpoint right here, it's based on where it was, from last week. So that's also a support. And you have the buy zone. So a trip downward, even though that there is a lot of space, you can make the claim that there's one resistance right here at 538. Let's move this and borrow it. I know I'm moving it without looking left, but let's be reckless, right? 537.50 is our first support. And how does that line up with here? Right in the buy zone. So this, I'm going to solidify this as one of my main areas of support. You know what? I'm going to change it to red wine. A little less obnoxious. This one down here is a line that I've been holding on my chart ever since we started rounding off the top. This is my goal. I'm going to change that to green for goal. This is now my personal support to start looking upwards. If this support is broken, we're going to revisit a lot lower. If we hold this support, that's a good inclination that we're not going into this bearish downtrend into Q4, and we can possibly finish off great. This has nothing to do, by the way, about the Santa rally or whatever. I'm not a big proponent, or I can't say I'm not a believer in the Santa rally because there is a bit of a push at the end of the year. Now I don't know how I can't even say it with a straight face, but this has nothing. The market direction has nothing to do with that rally. It's probably for a month or so, and it's a rally, and the market keeps trading as it is. If you want pure explanations of that, look back in the last couple of years, and you'll see what I'm talking about. So this 500 is a really serious possibility, or at least 517. This is a serious possibility. I'm looking for it to hold here to continue a bullish end of the year, but it doesn't have to be the case. If we look at NVIDIA is purely marked up to continue that downtrend through to November, right? And after we hold here, we bounce up. So I know I'm getting a little too macro for us, but that's the idea. I just mark off levels, and you mark off levels to say, okay, once I get to this level, if we hold this, then I'm going to be looking for higher. thing that I've been saying recently, and it's really kind of, it's been getting a acceptance, I guess you'd say, or it's resonating. That's really what it is imagine a box, right? Imagine a box that you have an area of possible price action. And we'll just draw it like this. And you can do this with intraday also. In fact, it's actually a lot easier on intraday, but we're already on the 4-hour chart. So if the price action gets to the low end of the box, finds support, you should expect it to get to the top end. And if it gets to the top end and it breaks back down, you get puts. But if it starts to break free and go higher, then we've broken the box, and now we're on a bullish trend. If it goes lower, we've broken the box, we're on a bearish downtrend. So a common misconception is you wait for the price action to get to this area, and if we break free, you start piling to puts to take advantage of the down move. There's a rule of I forgot how the exact saying goes, but you want to get in before the action. So in other words, when looking to get into a position, you don't get in right before the breakout, right? You don't want to get in right before that big move. Oh, we're reaching the top of the box. We're about to explode out of it. We got to get in this, honey. Come on, take second mortgage out. Forget the kids. They don't need to go to college. Just take their funds. Oh no, they're going to go to college 17 times now because we're going to be in the money. Let's get in before the breakout happens, and then it holds resistance and it comes down, and then everyone gets out, and then it bounces back up. So the idea is you want to scale in, but you want to get in a bullish position when there is little to no chance of more downward movement. In other words, we don't want to get in before the breakout goes up. We want to get in when the price action says, I don't think I can go down any further. Then that's when we get in. Because even if we ride it back up and it doesn't break out, we still made this profit on this move here. Does that make sense? So we don't want to get in before the breakout. We want to get in before when there's no chance to go further. So actually a move down this week and next week, how far that move goes down will be a great indicator on getting into a bullish position, starting for 2025. We're coming into the time of the year when we start thinking for next year. I know it's crazy. I really do feel like I was just saying Happy New Year to Bryant and a couple, guys. I feel like we were just talking about, this year is going to be so interesting. And now we're coming down to the last 3 months. But this is how you start thinking in market. In the markets operate, 6, debatably 9 months ahead of what the civilians, I call them, the people buying and complaining about the price of milk and the price of chicken and the price of gas. We are looking at the inner core of that, right? So if we start holding a good position here and start making headway to go higher, that could lead us into a good 2025. And there's no reason why we should have another bullish year. I mean, if you look at the SPY from the beginning, from its onset, there's only like 2 new lower lows, right? New lower low here in 2008. I think something happened in 2008. Might be wrong on that. And then also here in 2020, right? The pandemic. Datably here in the 2015 era. But in the overall trajectory of things has been bullish. So you buy, you hold, you sell 20 years from now. Doesn't matter what happens in between that. The ends should justify the means. And when I see people say, oh my God, my 401k is in shambles. Well, I don't understand that because we are now, double than we were 4 years ago. And even like 8 times that than we were, no, not 8 times, 4 times that than we were 10 years ago. So the idea is that any movement between now and next week will be temporary, right? A crash is such a dangerous word to say in a headline or in a title, but it's what gets people to click, and that's what gets people talking. So let's cycle back. We have the bookends, 530, and we said specifically 533 on the low side, and then 552 on the high side. Right? We started that out on a technical look, and then our QTA kind of solidified that. So we're going to look for moves within this area here Do I want to move this up? Yes. Trust in the quantitative theory. Let's make it 532. Boom. That's our box. A break above this, this is our next resistance. A break below this, we're going to be in some serious trouble. I don't see much action. There's more of a chance of a break up out of this box than it is below, because all this momentum could be used if some people sell off or they start panicking or whatever. It would be extinguished here, and people are seeing what we're looking at. There are millions of people doing exactly what we're doing. They're using the quantitative theory, but not much of the public is. QTA is one of the very few. There's a few other tools, and I've seen that is so easily to understand, I guess. We had this running joke that we could give this to, my niece was 12 at the time. We give this to my 12-year-old niece, and just say, just like a video game. If we have this level, we hold it. You want to play to this level. If we break this level, you want to play to this level. And if we hold here, resistance, you want to play back down to here. Level by level, level by level. You don't have to, understand indicators or anything like that. Obviously, I don't recommend you trading that way, because we do have access to indicators, and we have that. So use what you know, but apply quantitative method on top of it. So this has been a little breathy explanation, and if I were to sum this up in 60 seconds, I would say we're looking at bookends at the 532 and 552 range with the possible breakout, and then 560s for resistance. This is you could say the same thing for the entire week, this week, and then next week we'll look on to for the Fed meeting. I think the Fed meeting has more people waiting on the interest rate number more so than the CPI. I would even venture that the PPI this week is more important, because if I learned anything from Morgan Stanley and being in that world, is that the producers index is what the institutions look at, right? The consumer price index is, okay, that's interesting, but I want to know the people that are supplying the consumers, the ones that are buying all those materials in super bulk, that are dealing these major trades, international trades, and buying lumber in I don't even know how to describe lumber in that size, tons, multi-tons, or something like that. I want to see what they're up to, because they have done their homework in projections. They're not going to overbuy and just hope that the consumers come up to it. They're not going to underbuy and hope that they don't get sold out. They're going to try and buy perfectly to their needs in the next for the next quarter, at least, right? So pay attention to the PPI this week, and I think that's Thursday. It's always the day after, right? Core PPI, right? So keep in mind these two, and then backtest. Look at the last CPI and PPI. You'll see one movement on the CPI and a secondary movement on the PPI. This leads me to the strategy of, instead of using 0 DTE for tomorrow or for a lotto, use the weekly. Use the weekly, and then you can hedge and play both ends. So getting back to our weekly we have these two bookends. If you think that there's going to be it's more easier to go down, get tomorrow DTE for a downward move, but also get the Friday expiration for the upward. Not a big position, but just like a hedge. This way, if it does go down, this move pays for that one, and if it does go up, you can keep it. Or if it goes down, you keep this hedge on, and then later in the week as it comes back up. These are all just theories. I'm not going to tell you how to trade. I'm just wanting to go over the data on how to apply it. But that's just a theory in a way to cover both ends. And I think if you start thinking of the way institutions trade on, number one, do not lose money. We are not in the business of losing money here. If you're losing money, you don't belong in that chair. So if you start thinking that way, and you take these less risks, the amount of risks that I've come across in Discords is unsettling, right? I used to trade in the biomedical field with a team of other people. It wasn't an actual hedge fund. It was just a team of guys together. I was assigned to biomedical, and it was nerve-wracking. It was, 300% move, upward or downward, crazy, right? When you start working in large caps like NVIDIA, Tesla, Apple, Amazon, all the ones that are available in the gamma exposure list here, you start it's getting easier. You're getting ways to find hedges. You're using quantitative theory, using the GEX feeds that are available to you. You're applying more data than I've ever had access to. I started trading when Brian introduced me to QTA. It changed the way I traded, specifically more confidently, because now, just like what we did here, I had the technical lines we drew. We're able to pull up the quant chart, get confirmation on those lines, or a negation and say, you know what, there's no way that line exists. You're crazy. I don't know why you drew that line. And then we can also find the sentiment using the GEX. You apply these three together and you overlap them, and you have a different view. You have a different lens that you see in the market. Brian calls it X-ray specs, which is, I think, the perfect analogy, because we're looking blind with no levels, and all of a sudden you can lay over the quant chart, and boom, we have cold hard math. And then within those levels, we can lay over the GEX, and we say, boom, we have a high liquidity area, the high GEX area at 540, and some super high liquidity areas that are building 545 and 540. On the other side, high side, 554, is that right? 553, excuse me, and an area of absolute GEX building there. Use these tools a lot. I was going to say all the time. Use them all the time. Go for it. I don't think I could trade a day without QTA. I look at it in the morning. I take a glance of it. I'm like, yeah, that trade still makes sense. I maintain my trades, and that's what I do. When you break it down on the intraday level, we'll cover that in another video, because getting into this is totally more high speed, high frequency, and much more decisions. But on a little bit of a macro view, that's the way we use it. You build a box, you find the bookends, and then you find the sentiment within it using the GEX. And I know I went away from focusing on NVIDIA too much. I did want to say I wanted to touch on NVIDIA. I might make it just a separate one of that and release the video later. I probably won't. I always say I do. I never do, because I can't edit myself. I don't know how you guys are even standing the sound of my voice. I want to thank you guys. Oh, by the way, thank you guys for coming. If there's anyone that's not on the gold side, for coming to this seminar, you can use the code DNOW30 and you enter it in checkout. It will give you 30% off your first month. And then you can see how much you like it, and when you want to get to the annual or whatever, you just let me know and we'll work that out. But the idea is that you want to get comfortable using it. Screen time is the way you learn anything, right? You want to learn how to ride a bike, you can watch it on YouTube, but it's getting out there, riding the bike, and getting used to it. So if you're not comfortable trading money yet, perfect. Use paper trading. Use it until you get so confident with it that it almost feels like boring, right? When you get these wins and you're collecting these wins, that's like collecting a paycheck. You did the work, you did the research, you deserve it. You should say thank you and not be jumping up and down like you won the lottery, because we're not here to win by chance, right? We're here to earn. And the way we do that is by analyzing the data 3 times, 4 times, whatever you need to do to be confident about it. If you're not confident about it, don't take it. If you don't know, don't go. We're here. We don't need to. Day trade is not everyday trading. It's day trading when you see the opportunity. And I butchered that. I think it's called day trading, not everyday trading, because if we don't see something, we don't have to take it. So the CPI, I'm waiting for tomorrow. I'm going to trade reactionary rather than proactively, and that's it. We're closer to resistance now than we are support. So I would venture to say I'd be less surprised of a move down to 105 on NVIDIA rather than a pop higher. I'm saying that while I have $114 strikes on NVIDIA for next Friday. So don't take what I'm thinking out loud as trading advice, but a reaction from CPI could take us down to find support again. That's not to say that it won't continue trading in its direction, right? So let's look at this on the 4-hour here. 115 is the area of resistance, and we'll pop that up. And this is just like what I would do in the morning. You start looking at the technical, and then you apply the, oh, right, you know what? I have another one open. Is it NVIDIA? No, it's not. But I'll move this one to NVIDIA. So we keep the SPY. So this would just be like as if we're looking into a possible trade on NVIDIA starting today. We open up the quant chart. We notice that, okay, 109 is the end of the sell zone, and 114 is the 2 sigma line. Now, keep in mind, 2 sigma lines are not impenetrable, and neither is the buy and sell zone. We expect them to hold, but they don't. It's not like they have to, right? So we play the levels just like any other level. If it holds, we play to the upside. If it breaks, we play to the downside. Same thing with the buy and sell zones. I mean, the buy and sell zones in the 2 sigma, same thing. We play to the level. Now, the 2 sigma lines, it's just that 9% or 8% of the action happens outside of the two standard deviations away from the mean. It's not to say that it can't. It's just very rare that it does. NVIDIA takes that phrase and flushes it down the toilet. You can backtest for the last year on NVIDIA. It operated in the 2 sigma zone because it's a high catalyst stock. It's driven by lots of demand. It's currently trading times it's, when it should be. We have to examine this and accept it for what it is. But what I'm thinking is that we come back up, we touch 115, and then we head down lower. I know. Turning it on, it hurts. I'm sorry. But still within that downtrend. Within the trend, we can have ups and downs. It's all about how your time frame exists. If you want to trade 2 months at a time, we look for where we could be in 2 months. We don't look where we're going to go tomorrow and base our trade on 2 months, right? If we want to look where we're going tomorrow, we trade swing trades. We trade intraday. So with NVIDIA, it's a good possibility that we fill this to 115 and then come down here. I think I mapped it out actually right here. That was the move that we mapped out. How far does that go back? From earnings, right? From earnings, we found this hard support for a bounce off this. This might be enough bounce. The CPI could drag us down and we could follow along into the Fed and move down this way. This was the other possibility. This is the overall trend on NVIDIA right here from earnings. That was the overall trend. So if we were from earnings, this is not from earnings, it's from we reached the top, sorry. So when we reached the top, we were expecting to come back down on the trend, but we consolidated because of earnings. This is the overall trend, and this is the Mishigash, or I forgot the Yiddish word. The Mishigash within between there. Anyway, I need a cup of coffee. I'm getting a little loopy here, but that's the idea. We want to find where the tops are and where the bottoms are and play accordingly. I did not spend the amount of time on NVIDIA I wanted to. Like I said, I'll do a separate thing on that. I'm probably going to keep that compartmentalized because there was some other people that are following along from the past workshops on NVIDIA. But that's the idea. SPY. Stick to one thing, Doc. Apologize for everybody. To everybody. I am losing it. I really do appreciate you guys. So if you're watching this on YouTube, do me a favor, hit the like and subscribe button, and you'll get notified when I do this again. And keep in mind, SPY is going to have CPI tomorrow and also PPI on Thursday. If you haven't played or haven't paid PPI much mind, look at it this time and see if there's a different reaction or a bigger reaction than tomorrow's. And then we'll do this again on Thursday, and we'll also do it again before the Fed meeting on next week. And we'll see if we can get some other I think we have one for indicators, using indicators with QTA. But if there's anything you guys want to cover, reach out to me, post in public chat or post in Gold Enthusiast chat. Let me know if there's something you want to go over specifically. If you having trouble determining how to use the GEX table or the quant levels, there's plenty of videos. Brian, you can find Brian on YouTube under Trading Lit with 2 T's. There's a video on everything. And it's probably the most informative videos and the most categorized videos I've seen on YouTube. And I'm not just saying that. Use them, and if you have any questions, post them in chat. And I really want to thank you guys for coming down. And sorry I got started a little late today, but I do run an insurance business, and this is Medicare season, or approaching Medicare season. So it gets a little crazy, but we're going to still we're going to still power through. So keep in mind, if you don't know, don't go. You don't have to trade if you don't know it. And trade, if you're new to QTA, trade it in your head. Trade it in your head. Be like, okay, you know what? I do see that sentiment going down to the 540. Let's put a imaginary, just pick an option. Pick an option, make an imaginary one. And if it wins, make a note of it. Make a note of the size of the GEX that you looked at, what the confluences were. Did the absolute GEX shift down to this level and it become confluent? Did it become an area of triple confluence? Did it have the put volume, the high GEX, and the absolute GEX? Where was the max pain on all this? Make note of this, and then your brain will learn how to use it, and your skills will be vastly more confident. And I want to say I guarantee you'll be more confident, but I can't. But I do say that if you apply these tools correctly and you use them diligently, you will be more confident. That's for sure. So I guess thank you guys very much. And remember D Now 30. If you're new to it, you're on the fence. Come on, we just signed up a whole bunch of people last week with that great Labor Day sale. We have a whole new class to teach. We're gonna do more workshops. We're gonna do more hands-on, and we're gonna have a great Q4. Thank you guys. Thanks a lot.